Hello everyone, welcome back to this week's Technical Insights. Last week, all three US benchmark indices ended the week lower, even though they tried to regain some ground on Friday. Investors shook off a weaker than expected non-farm payroll report, which raised further concern about the US economy after the recent streak of weak macro data, which briefly sent the US Treasury lower. The non-farm payroll numbers increased by 151,000 in February, less than the consensus forecast of 170,000 from economists. The unemployment rate also ticked higher to 4.1%. On Friday, the US Fed Chair Jerome Powell said that the US economy was in a good place and the US Central Bank will not be quick to cut interest rate and monetary policy is currently well positioned to act as needed. He also echoed concerns about Donald Trump's trade tariffs and the uncertainty about the US trade policy, which led Wall Street to the biggest weekly decline in months. Last Friday, the Dow Jones Index actually added 222 points or 0.52% to end at 42,801 points. Broad index S&P 500 rose 31 points or 0.55% to close at 5,770 points. Tech-heavy Nasdaq Composite gained 126 points or 0.7% to finish at 18,196 points. Despite the Friday recovery, the S&P 500 posted its worst week since September 2024 with a loss of 3.1%. The Dow, meanwhile, also fell 2.37% for the trading week. The Nasdaq Composite tumbled the most at 3.45% for the period, during which it also entered correction territory, which means the tech-heavy index finished the session 10% off its recent high. Donald Trump said last Thursday that a certain number of goods from Canada and Mexico that are covered under the North American Trade Agreement, known as the USMCA, will be exempted from the announced duties until April the 2nd. This move effectively walked back much of the original plan for tariffs on the two countries, along with China. But the market still sold off for the week, with uncertainty mounting amid the constant updates and a lack of clarity on what to expect for the longer term. Morgan Stanley also reported that they revised their projection for US economic growth lower for 2025 and 2026, saying that the facts have now changed. They now see a higher inflation in 2025 with a more pronounced and sooner reacceleration in goods prices. The mix of firm inflation and the low unemployment rate could put the US Fed in a very tight situation. In Asia, things are looking slightly better. Hong Kong stock did slip on last Friday but ended the week near its highest level in 3 years, as investors' enthusiasm towards China AI developments continued to fuel the market. The Hang Seng Index fell 0.57% or 138 points to close at 24,231 points. The Hang Seng Tech Index slipped 0.52% or 31 points to end at 6,037 points. This decline followed China's trade data that showed an unexpected tumble in import over the January to February period, while export lost momentum amid the escalating US tariff pressure. The Hang Seng Index backed off from a 3-year high as investors turned cautious ahead of China February CPI and PPI data. Hong Kong shares of Alibaba Group jumped to the highest since November 2021 to close at 140 Hong Kong dollars. Alibaba announced the release of their AI reasoning model, QWQ32B, which it said was on par with DeepSeek R1 model. Alibaba said the QWQ32B demonstrates capabilities in mathematical reasoning, coding, and general problem solving in benchmark tests, performing close to top models such as OpenAI and DeepSeek R1. For the trading week, the Hang Seng Index jumped a massive 5.62%, while the Hang Seng Index also jumped massively at 8.43%. Back to Singapore, our benchmark index actually closed lower on Friday, tracking losses in regional market ahead of the key US non-farm payroll data. It ended last Friday trading session at 3,914 points, down 2.58 points or 0.07%. In Singapore economic news, MAS announced that Singapore official foreign exchange reserve grew to 511 billion Sing dollars in February from the 510 billion in January. Top gainer on the STI last Friday includes UOL, EFI Retail Group, and Singtel, while our three local banks ended the week mixed, with DBS up 0.04% to $45.98 and UOB ahead by just 0.1% to $38.63. but OCBC lost 0.2% to $17.16. For the trading week, the STI is up about 18 points or 0.48%, with the all-time high remaining at 3,951 points back on the 24th of February. And year-to-date, our STI is now up 3.27%. For the week, the STI was led by ST Engineering, which saw a significant increase of 13.3% for the week. Analysts from DBS increased their 12-month target price from $5.40 to $6, while Phillip Capital also upped their 12-month target price from $5 to $6.10, noting that the stock was flying and firing on all cylinders. UOL Group followed with a rise of 7.6% for the week, while Sembcorp Industry experienced a 3.4% gain for the period. The IHS REIT index also ended up 0.4%, with Parkway Life REIT rising 3.7% and Capital Pacific Oak US REIT up 4.76%, leading the S-REIT last week. So for this week's technical analysis, let's have a look at high-flying ST Engineering. Last Friday, ST Engineering share price closed higher by 3 cents or 0.49% to reach at $6.13. For the trading week, their share price rose a massive 72 cents or 13.31% for a third consecutive winning week. From the chart, we noted that ST Engineering has been on a gradual uptrend since the beginning of 2024. ST Engineering recent high was seen on the 19th of February over here, where it hit a high of $5.13 before it broke up above the upper band of the long-term uptrend channel. Looking at possible support levels, the first will come in at the 20-day moving average, which is the white line that you see here, now at $5.30, with the previous high on 19th February landing further support in a change of polarity at $5.13. The 50-day moving average, which is the blue line that you see here, is now at $4.95, just below the $5 mark. With ST Engineering share price near its all-time high of $6.27, the next resistance level will be the upper bound of the Bollinger Band at $6.16, and above this level will be the psychological level of the $7 handle. Looking at the indicators, the MACD has a very positive reading, indicating that the uptrend is still very strong, even though we saw a slight drop in the MACD histogram last Friday. The RSI reading at 86 is way above the 70-point overbought mark, indicating that ST Engineering share price may see a technical pullback soon towards the 14-day RSI moving average at 75 points now, or even a 50-point neutral mark on the RSI. So with the MACD showing that the uptrend is firmly intact and the RSI signaling that ST Engineering is currently overbought and may face a technical pullback, investors may use the 20-day moving average at $5.30 or the previous high on 19th February at $5.13 as possible support level to further accumulate on ST Engineering shares. Based on 14 analysts covering ST Engineering in the past 12 months, 9 have a strong buy call, 4 have a buy call, and 1 have a hold call. There are no sell recommendations, and the average 12-month target price is $5.78 around here, with the maximum estimate at $6.60 and a minimum estimate at $4.90. And these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.